What's up, guys? It's April 7th, 2025. Hope you guys are having a good day. Got a sideways day in the market. Got a very sideways day in the market. Huge bar today. Even yesterday, I was watching the gap down the opening bar. I was like, whoa, what's a 200-point bar? I want to give a quick shout out to all the members and people who keep showing up. I appreciate you guys. Thank you for your support. The channel has been growing nicely. The channel started out, I made the channel so I can learn how to talk about price action, and it's just growing into something else I didn't expect. So I'm pretty excited to see where we can take this. But did you guys see that 207 point bar? That's insane. A lot of volatility in the market right now. I don't think it's a problem if you're not trading. I'm taking a back seat until this volatility dies down a little bit because I took one trade and it ripped against me and it just shredded me to pieces. So I'm just studying and doing what I can. Anyways, let's get into it. Pretty big bar. We've had a lot of selling, man. Leg one, pull back leg two, and this is looking climactic as hell. I'm being cautious when I say the word climactic because I think every time I've said climactic, we've just gone down lower. So bars can be breakout bars. Bars can be climactic at the same time. We have a bar here, and now there is a gap that's being made. It's not a good gap because the third bar is a bear bar. Is a bull bar. We generally want to see 3 bear bars in a row in this scenario to see a good gap. So here's a gap, 1, 2, 3. There's a gap breaking out below the EMA. And you guys want to know something crazy? I remember selling this bar right around here, and I got out here on the options contract just for a small swing. Trying not to beat myself up, but but yeah, 1,200 points lower. 15-minute chart. This is the daily chart. This is a 15-minute chart. The overnight session just opened up. It's 3 p.m. where I'm at. So bad follow through. Very big bear bar. No follow through. Could say it's 3 legs lower. Leg one, pull back. Leg two, pull back. Leg three. No trend line break. So this could also be counted as one leg. But within that leg, there was a trend line break here and here. Previous day's highs have not been tagged in a long time. So the previous day high here, we rallied above the previous day high and sold off. Here, we rallied, sold off. That's a trend line break. Then we go sideways and we make it to the previous day's high a couple times, but we're selling off at every time. Look what I mean here. New high. Okay, one day follow through, sells off. New high, sold off. New high, sold off. New high here, we broke. Here's 3 days in a row where we traveled above the previous day's high, but there's still tails and a lot of selling pressure. Now we have, this could be a climactic leg, this could be the start to a new leg down. We are extended away from the EMA. I guess that's where we opened it. And it looks like we actually opened up with a gap up. Let's just see real quick. Not really a gap up, but the daily chart looks like it has a gap up right here. 15-minute chart. So this is yesterday. Where's today? This should be, so this bar is today. Okay, so today we sold off right around here, created a tail, rallied, almost made a new high, ended up being a double top with Friday's price action, and we sold off for 3 legs lower. Leg one, pull back, leg two, pull back, leg three. Inside bars, breakout mode, rally. Bulls retested the high here. This is a bad breakout bar, and then rallied again, 2-bar reversal. This could be nothing but a bear flag, triangle bear flag. It's breakout mode. We've had 5 pushes. So push 1, push 2, push 3, push 4, push 5. I summarized that. Let's get into it. Gap down with follow through bars 1, 2, and 3. I thought we would have some sort of sideways price action under the EMA. We had it on the EMA, so that tells you bulls are finally collecting bars above the EMA. So that's good for the bulls, bad for the bears. Tap down. Bar 1, bear bar closing around its midpoint. Bar 2 closing above its midpoint. Bar 3 closing on the midpoint. So we see 3 pushes down immediately. Leg 1, pull back, leg 2, pull back, leg 3. That's a wedge bottom to climactic price action. Bears did get followed through the gap down, but then we see 4, 5, and 6, and now we have to see that bulls got a gap here. This is strong. I think this is stronger than this. I think it's strong to get a second leg. 7 and 8 shallow pullbacks, and then we see 9 being climactic with a trend line break like 3. So leg 1, pull back, leg 2, pull back, leg 3. I don't think the risk, if you were trying to buy this bar, you have to be very fast for a scalp. I don't think that's 200 point bar. I don't think that's a good, if you buy this, you are brave, to say the least. But you could scalp it for like, what, 50 points? Or 100 points. That's a 100 point. Insane. This is insane price action. So, where are we? Shallow pullback, bar 9, bull bar closing on its high. Big gap here. We've had a big down to the left. Ooh. Got a big down, big up. That's sideways price action. And to top that off, let's say you're not looking at yesterday's price action. Well, now we have a big rally, big sell off bars 11 and 12. There's a gap right here. So now I always talk about it in trends, gaps they open, in trading ranges, gaps get closed. We have a big gap here and it gets closed pretty quick with 11, 12, 13, 14. You could say 13 is the start to the second leg down from bar 11. And why is it the second leg down? Why? There's two things going on. So we could say leg 1, pull back, leg 2, pull back, leg 3. I was counting it. Leg 1, pull back 13, breaks the trend line, right? It breaks the previous bar's high, so it's a trend line break. And then 14 sells off for a second leg down. So there's that leg 1, leg 2, leg 1, pull back, leg 2. If we're in trading range, second leg traps are very common, and 14 is a good example of that. 15 creates a 2-bar reversal, followed through with 16, breaking out 17. We got another gap, but we're aware that we're in a trading range and gaps get closed. So instead of buying the high, maybe we fade the high 1, 19. Why is 19 a high 1? Leg 1, pull back, leg 2, pull back, leg 3. This 18 is a pullback, and then 19 made a high. High ones in trading range are generally good fades, and then we sell off. So, 19 sells off, or 20 sells off, 21 follow through, and now you could even say leg 1, pull back, leg 2. Question came up this weekend in Discord: how do I count legs? How do I restart the leg count? That's a tricky topic. What I generally do is this leg strong enough? I look at a leg. I say, is this leg strong enough to get a second leg? If the answer is yes, then I ask myself, is this a leg 3? If it's a leg 3, then you might be shorting. You could be getting trapped in a trade, like you short here and you get trapped here. So what I mean by that, leg 1, pull back, leg 2, second leg trap, be short 14, and you're gonna get a nasty snap. These are big bars, guys. That's almost it's about 70, 75 points against you if you put a stop right here. And it's almost a skunk stop because your stop's on the EMA. The stop right here would be on above the swing high, and that's, I said earlier, like if you guys are not trading today, or you're trading or if you are gonna trade very small, trade the micro, trade one contract because the range is enormous. Look here, so leg 1, so excuse me, okay, let's rewind. Leg 1, pull back, leg 2. Okay, structure's complete. Now we have 3 legs higher. Leg 1, pull back, leg 2, pull back, leg 3. Now this entire structure gets its own second leg. Leg 1, deep pullback, trading range behavior, testing the 50% portion of the gap made by 10, 11, 12, and it sells off. Look at 22, it goes 1 tick past the bars, the previous swing. Leg 2 is completed if it goes 1 tick past the previous swing. So look at 22, it goes past 14's low. So this leg 2 is completed in many different ways. Leg 1, pull back, leg 2, pull back, leg 3. 24 ends up being a higher low. I say this in just about every video. There's 2 types of trend line breaks. Leg 1, pull back, leg 2, bears will make a new low. Leg 1, pull back, leg 2, bears make an equal low. Leg 1, pull back, leg 2, bears make a higher low. Higher lows are the best if the bears get a higher low. That's the best situation for the bulls. Bears obviously want a new low to continue down. You have 3 legs lower here. 24 is getting. If you short 24, you're shorting right into support. You're shorting into the lows of the rally that started on 22. So that's a dangerous short. Then we get another rally. 25, 26, 27. Leg 1, pull back leg 2, pull back leg 3. 27 is testing this low here, and it sells off. And now the price is contracting. So we have a contracted triangle. It's shrinking. Price is shrinking. The market goes from expansion to contraction. We've been expanding for days. So I think it's natural to go into a contraction mode and let this volatility dry up a little bit. I don't want the volatility to go to 1 to 2 point bars, but man, I was just watching the markets today and I'm thinking, where would my stops go? Where do the stops go? Like if you're trading one micro, a 200-point bar, isn't that $1,000, right? So it's 5 points times 231. And that's if you buy the high. I don't think any of us bought the high. You could maybe buy bar 6, but I also think that's a sketchy buy because we're right under the EMA after a gap down. So it's the markets are hard enough, and with this much volatility, it's just that much trickier. So just be smart if you guys are trading. Don't want anyone blowing up. Where are we? I've been kind of rambling here. Okay, so we have a 3-bar rally, sells off. Is this bear bar? Is this series of bars 28, 29, 30, 31, 32 shot to get its own second leg? Leg 1, pull back leg 2, and it does. And overall, you could say now we're any leg past leg 3, so it's past leg 2. Leg 1, pull back leg 2. Okay, any bear leg past that might become trading range behavior. So fading that for scalp work, sell off. You could scalp that, it worked. And then you could catch a swing if you bought the low of 42. I'm not suggesting you buy the low of 42, but what I am suggesting is legs past leg 2, probabilities for trading range behavior go up. And you can see that being demonstrated here. 42, bulls are willing to buy it. You can see a big rally. 43 sells off. 44 is the inside bar. 45 breaking out above the EMA, producing a good gap because it's more than one bull bar in a row. 46 follow through. 40, here's that expansion contraction, right? 45 expansion. 46 starting to contract. 47 definitely contracted. 48 expanded. 49 is a bear bar. It's the first sell off. It's a shallow pullback after 6, 5, 1, 2, 3, 4, 5, 6. After 6 bull bars in a row. Could also say it's the start of the third leg, with the first leg being 44. Leg 1, pull back leg 2, pull back leg 3. Look, leg 3, bears were shorting the high at 54. Could make money shorting there, and then bulls bought that, making a double top. So I just talked about trend line breaks. Let's just do it real quick for the bulls so you can see the pictures both ways. Bulls want leg 1, pull back leg 2, new high. That's the best situation for the bulls. They could get that. They could get leg 1, pull back leg 2, double top. They could get leg 1, pull back leg 2, higher low. This is a bit of the first two scenarios. Leg 1, pull back leg 2, new high, double top, however you want to call it. It's any leg past leg 2, so it's trading range behavior. Bears were shorting bar 58 before bulls were able to make money, like the bar 60. So if you shorted 58, bears made 1 hour before bulls. That's trading range behavior. 59, 60, strong to get a second leg down. Leg 1, pull back leg 2, pull back leg 3. Then we go into a tight trading range. And when I say tight trading range, I think this is still like 20 points. Still 60, 70 points. So it's easy to get completely annihilated here during the trading range days, Here's a little bit easier. It's a broad bear channel. You short the pops. Here, the context has not changed. We're going sideways. If you guys are looking for reversals, think of the Titanic, right? It doesn't just turn around. A boat doesn't just turn around. You don't have to think of the Titanic. That was the wrong saying. Just think of a boat turning in the water. Boats don't just turn around like a sharp U-turn. It takes time. It takes time for them to lose the momentum and then move in the other direction. So the bulls are gonna have to do some work because it's gonna take time. I'm so hesitant to say the bulls are reversing because every time I've said something like that, it just goes lower. So. But think of that if you're trying to buy the dip, there's still gonna be some selling pressure. Bulls definitely want to rally, get a new high into the EMA and go up. Interesting time to be a day trader because it's a double-edged sword. The money is great, but I fell on the other end of the sword this time around and I got shredded with the volatility. So I'm just giving myself some space and then come right back to training the system. So I'm pretty excited to get back in the markets. I'll give it like a week or two. It'll be fun. Hope you guys are doing good. I want to give a shout out to everyone. Thank you for your support. You guys make this thing fun. Please keep asking me questions in Discord. Someone asked me a good question in Discord today, and I always got time for you guys. So thank you. Hope you have a good day. If you learned something, share the show. Don't be a hoe, and I'll talk to you guys tomorrow. Bye.